Welcome to Bloomberg Law. I'm Pacchia. Last week, the United Kingdom's Serious Fraud Unit opened a criminal investigation into the alleged fixing of Libor interest rates among various banks. The investigation comes after an unprecedented penalty was leveled against Barclays for their role in this controversy. Joining me now to tell us what this all means is Chris Whalen, Senior Managing Director at Tangent Capital Partners. Chris, welcome back. Thanks for coming in.
Thanks for having me.
All right, let's do a little Finance 101. What is Libor?
Libor is an indication from the London clearing banks as to where they'll lend money. It's not a real live market price. It's not an average of all the trades that happen in a day. It's simply an indication of where these banks are willing to lend money.
But it's a global metric that is awfully important to our financial system. Just why does everything seem to hang off of it?
Well, over the years, the legal community, the financial community, investors, many different constituencies decided to use the Libor rate as a reference price. But it's interesting, in your lead-in, you were talking about the Serious Fraud Office investigating price fixing. That's actually the term they use in Europe, in stock exchanges, and you could argue with Libor, too, that it's a fixed price. In other words, the banks consult among one another, and they say, well, I'm willing to lend at 3 3/8. Another guy says 3 1/2. They aggregate those prices, and they're supposed to report them. But it in no way, shape, or form represents the average price for actual trades that day, the high, low, nothing like that. Now, they could aggregate all the trades, show us, say, the midpoint and the high, low, much the way we do in the U.S. markets, but the banks have not done that because they weren't asked to. So I would argue that the community of users of Libor, and there are many of them, have, I think, evolved their understanding of this rate, while the banks have been doing the same thing that they've been doing for over 100 years. And now we've just suddenly realized that this isn't a live market price, and lo and behold, you have people with lawsuits and everything else, and we'll see what happens.
Well, a lot of people are quite upset over finding out that this is kind of how the system works. Are you saying that it's basically their own fault and they assumed risk by entering into the financial marketplace to begin with?
Well, since the 1930s, we've been trying to convince the citizens of the United States, and I think Europe too, that there is no risk. Government basically comes in and guarantees banks, guarantees bank deposits, and regulation is supposed to be the panacea to prevent bad things from happening. But the reality is that Libor, as I say, is just an indicated price collusively set by a lot of banks who collude on almost everything in the City of London. I've worked there twice. So you have to, I think, take that as a bit of a reality check for investors, because our understanding or our perception of what Libor may or may not be in a contract or a financial instrument may not be the same as the way the banks see it. And since they weren't forced to really make this a transparent price, and as I said before, say gather all the trades that were done at the overnight rate for a day and average them and give us the high-low, then we would have a better appreciation for the market. But that's not what this is. This is simply an indicated price from all the banks in London.
But it's collusively set. I mean, presumptively, people are harmed in that process.
Well, yes and no. I mean, that's the same way most stock exchange fixings happen in Europe. They consult on the floor. They say, what's the yield on, the 6.5 of 2010 or whatever it is, and they then put that price out. But is that the average price of all the bonds of that particular vintage that were traded that day? No. I used to trade bunds in Frankfurt. So what I'm saying to you is that what we understand Libor to be and what it is in fact are perhaps two different things.
How much do you suppose the procedures and practices at Barclays deviated, if at all, from the other players in the Libor?
I don't know. I think there's an issue about what they reported and how they reported it. In other words, was it an actual reflection of where the bank was willing to lend money, and the other banks too, or were they playing around with this kind of consensus indication of price, and then they changed it before they submitted it to the authorities and made it public, right? That's a different issue. But I think what people need to understand about Libor is it's not really a price. It's just an indication. So if they were playing around with that after they had already determined what the indicated price was, then I think that's a real issue. It's a breakdown in systems and controls at the minimum.
So what needs to be fixed here?
Well, I think we have to turn Libor into a real market price. Let's gather all the trades overnight, 3 months, 6 months, whatever it is, right? Let's average them. We have to protect the counterparties, obviously. And let's give a high-low. because then we're going to know not only what the average price was, but we'll know the dispersion. In other words, one of the reasons I think the banks didn't want to have more transparency in this market is they didn't want to see the outliers, high and low, around LIBOR, because people would say, well, somebody was borrowing half a point below, half a point above, whatever their credit rating was, for example. And that might be another way of addressing it. I think transparency is always the answer. But this is an 18th century process that has suddenly come running smack dab into the perception of 21st century investors and the public. So maybe it's time to change it.
Right. What are the chances of that coming to pass?
Well, look, it's like politicians everywhere. The folks in the UK who are screaming and yelling at Barclays and holding hearings today, let's see if they actually move forward and make changes to this market that would help investors and other users of this rate. I think that's really the test. Unfortunately, the banks support the politicians in the UK the way they do in the US. So they may grandstand for a few days and then nothing may happen. But I think if you really want to fix investor confidence, public confidence, which is clearly at a nadir when it comes to banks, right, then we need to just open up this market and make it a real price. We can protect all the counterparties. We don't have to disclose each trade. But you could certainly tell us, where did most people borrow money overnight in London yesterday? And Bloomberg could report it.
There's a really interesting quote floating around in the news flow over the last couple of days that comes from the chief executive of a multinational bank. He or she is referring to the lawsuits and settlements that could come out of this incident and compared them to what the tobacco industry faced some years ago, something like more than $200 billion around in the late 90s. Is it that big in your opinion?
I don't know, because if you go into court, let's say you're a municipal issuer, and the supposed manipulation of LIBOR cost you money. You're going to go into court and say, Your Honor, they were manipulating this price. And then we're going to bring an expert in from London, and the expert's going to say, well, Your Honor, this isn't really a market price. It's an indication of willingness to lend that's set by all these banks subjectively. What is the judge going to say? How do you determine what degree of manipulation versus what degree of subjective judgment, if you will, on the part of the bank was factored into the price on a given day? I don't know how you parse that.
No, the litigation is going to be fascinating. I think we're going to be following it for many months.
It'll be good for the media, but I just don't know.
Look at my chops.
I don't know how much and how easy it's going to be for claimants to make the case regards damages, because the reference price is so squishy. It really isn't solid. I mean, I had a LIBOR floater until 4 weeks ago, so I'm happy. They actually, saved me money. But I just don't know, when you get into a court of law, whether it's in the U.S. or the UK, and you're trying to prove manipulation of something that's not really a market price, I don't know how easy that's going to be. I mean, I'm not a lawyer, but I just, having worked in the markets long enough, only people who work in the money markets in London get the joke, which is that this isn't really a price. It's a bunch of guys who work for the major banks who say, well, I'm willing to lend money here overnight. What is that? I don't know.
You have been following the banks for, I think, most of your career. How do you expect management at the large multinational banks to react to this? Are we going to see more CEOs departing from their positions?
Well, if you find a bank that took the actual indicated price that was supposed to be disclosed and then changed it deliberately, I think heads are going to roll, because that is different. And if they're actually mucking around with the indication that should have been put forward to the public and to investors, I think that's an actionable event. But, at the end of the day, I would hope that the banks would come together in the London Clearinghouse and say, look, we're going to fix this. We're going to report a high, low, and an average every day. And we can do this. And they should take the initiative, because if they wait for the public authorities to deal with this, they may not like the result. And frankly, we should do very similar things here in the U.S. U.S. banks hide pricing all the time. You guys at Bloomberg still have to get third parties to give you credit default swap data because the big banks don't want to release it. So there's a lot of issues in all of our markets where banks try and reduce transparency to increase their spread. Hello, this is banking, right? I mean, there's no surprise here. And I think it's in the public interest to push back and say, no, we need to see at least the average for the day, and maybe we'd like to see every trade on a blind basis, take the names off them, but we want to see every tick. What's wrong with that? You guys would love that. You'd have a new data series to play with.
Sure, why not? I think it's going to be a long time before we see the end of this
story.
Once a month update. Excellent. Chris, thanks for stopping by.
My pleasure.
That's Chris Whalen, Senior Managing Director at Tangent Capital Partners. If you'd like to learn more about the issues we just discussed, be sure to check out our offerings on BloombergLaw.com and also on the Bloomberg Terminal. You can follow our updates on Twitter and see more of our videos on YouTube. I'm Lee Pacchia. Thanks for watching.